The Momentum-Unisa South African Household Wealth Index says it declined by as much as 131 billion rand. And that was only for the third quarter of the year. At the same time, household assets diminished in value while taking on more debt. Worryingly, the loss in asset value occurred despite the economy exiting a recession and growing at 2.2% that quarter. Momentum economist Johan van Tonder joins us now. Johan, thanks very much for your time. What actually happened, giving us the picture I have just read?
Good evening, Vuyo. Yeah, it's actually a very sad story. The main thing that happened was that the value of households' assets declined sharply in the third quarter of 2018, and that's mostly because of the retirement fund assets not growing, and that's happened because of the share market not growing. And as we all know, most of the households' pension fund money is invested in shares and bonds and listed property and cash. So basically the shares didn't perform. In actual fact, it took a big knock in the third quarter. And most of it was sort of caused by international factors, but there was also self-inflicting wounds. Internationally, we all know about the trade war between the United States and China, which caused a lot of uncertainty and capital flight out of South Africa into more developed assets. So the share prices of the companies in which our pension funds invested took a tumble. But at the same time, house prices, or the value of residential property in real terms, declined further. So the two big asset classes, namely residential property and pension funds, declined sharply in the third quarter.
I'm sure a lot of people would be interested in the self-inflicted wounds, as you call them. What are those?
Well, basically it's the uncertainty for investors to invest in South Africa while they don't know what's going to happen in policy terms. If we look at, for instance, a state capture investigation still ongoing, that caused a lot of uncertainty on international markets, and at the same time, they refrain from putting funds into new ventures. What we also had until early last year was that the mining charter wasn't finalized. So that was finalized. That's one tick in a box that we could tick. But then everybody's now waiting for what's going to happen in the election. So all of that is causing investors not to invest all the cash they do have available to invest. And in addition, households also are in a tight spot right now because of all the price increases. We just had a lot of increases in the petrol price before the declines, but that as well as a little bit of additional debt that they took on put them in a tight spot, and therefore they didn't really have a lot of money to spend, and as a result the demand dried up, and hence the bad economic growth that we got in 2018.
Is it not normal, though, Johan, for whenever a country is going into an election, there's a great deal of uncertainty because people aren't sure whether policies are going to change or whether whoever will be coming on as a new government will stick to their promises even. Is that not something that happens around the world? And one is not saying it's ideal, but is it not a common occurrence?
Yeah, it sort of happens all over the world, but especially in emerging markets, there's more uncertainty. If you go to the more developed markets, for instance, we had the Republicans taking over from the Democrats in the US. There was a lot of, not a lot, there was uncertainty, but the economic environment was stable. So everybody knew the policies. They knew the central bank in the US was going to be independent. The US Federal Reserve would take their interest rate decisions based on a policy that's been there for years. But every now and then, what we get in South Africa is somebody wants to tamper with the inflation target or the independence of the central bank. And because we don't have that long or very, very long history of other countries of stable policies, that's why we are a little bit more uncertain and investors staying on the sidelines. So in short, we still need to build up years and years of credibility of policy before that type of uncertainty will diminish in this country.
Johan, that's why we're going to leave it for this evening. Thanks very much for your time, Johan van Donder from Momentum, of course, talking about a report that has just been released, which shows that South Africa's net worth took a knock last year, and the impact of that, of course, is that we are going to find it even more difficult to create the jobs that we need. Economic growth is going to be a lot slower, but it also means that your pension that many of you rely on will be less and less. In other words, where you invest, you will be making less money than you would have been if the conditions were ideal, and what we're talking about now would not have happened.